again. Share the screen for you. And we start. Okay. So welcome back. Please let me know you are still here. Okay. Yeah. All right. So thank you so much for so persistent in this unit. And sometimes you are even more persistent than me, I think. So here we are talking about auditing PPE. What is PPE? Property, plant, and equipment, right? So remember, how can you get PPE accounts? Still by purchasing, is that right? So in this sense, auditing PPE is still a part of in relation to the purchase, because you need to purchase those non-current tangible assets. Okay. So from this sense, auditing PPE is not much different from auditing inventory. It's also not, it's also for the transactions, is also relevant to the purchase cycle. Okay. Then, so do you think PPE accounts are material? Usually it is.
Significant.
Mm-hmm. Yeah, it is significant. Let's say maybe not for all the companies, but for most of the companies, PPE accounts are significant for a few reasons. The overall PPE value usually would be significant, right? And also for each of the PPE item, the unit value are often very significant because the PPE item usually will be very big, very large. So that's why the total PPE could be material, and individual PPE item could be also quite material. So in that sense, also it means actually PPE audit sometimes could be very complex or could be very simple. We say it's simple because if the company only have, let's say, only 10 big equipment, for example. So the PPE account will be very simple, right? You just need to check those 10 individual items. This can make your audit very, very simple. For example, for the purchase of the PPE, you can even, if the company only have 10 PPE items, you can actually go back to these 10 items to check the initial, the purchase cost. So you could do 100% sample test. So that's why we say it's simple. It could be also very, very complex. Why? Because for PPE accounts, there are a lot of different variations in accounting. Can we just record some very special accounting treatment for PPEs? So for PPE accounts, often we have regular depreciations. And depreciation is something involves the accounting judgment, professional judgment. So it could be very subjective, right? So there will be a lot of manipulation opportunities here in terms of depreciation. So this is the area usually causes big concerns from the auditors. Also, in PPE accounts, we often come across revaluation issues or fair value determination. Those are so complex, right? So for example, revaluations, there are some special accounting rules regarding revaluations. What are they? For example, the revaluation should be done in accordance with the company's prescribed accounting policy, revaluation policies, and also revaluation, if they want to do, if the policy has been established, it should be done regularly rather than selectively. It should be done on the full line of the PPE item. You couldn't select individual ones. You couldn't say, I just want to reevaluate PPE number 1. I don't want to reevaluate PPE number 2 if they are in the same category. Also, leasing. Some companies actually lease the PPE items. So is this their own PPE assets or not? Is something you need to consider. If they are doing a financial lease, so what was the historical treatments for financial lease? And now, after 2019, in the changes of the leasing accounting standards, what should be the proper accounting treatments? Also, for PPE, if you are talking about the plants, the factory in construction, so what is the value of the PPE if it is still in construction? Do you think it could be very, very complex? Also for PPE item, so can you still record the accounting rules for repair and maintenance? Can you still record the rules of research and development expenses? So all of them indicates the PPE accounts could be very complex because you need to think so much about that, right? So those complex inherent risk factors also means the PPE account sometimes could be very difficult to audit. If it is concerning the value, if it's concerning the subjective accounting treatments. So in the PPE accounts, what assertions are usually significant and important, are usually material? Existence. So for the auditors, we often need to check the PPE items indicated in the book should exist. How can you verify the existence of the PPE accounts, the PPE item? By look at that to cite the existence of the item. Another assertion, rights obligation. So if you go to the factory, if you see the equipment, how would you know the company has ownership of this equipment? Look at, it's over there, but it could be actually borrowed, right? So probably you need to actually, in addition to look at existence, you also need to check the contract of purchase, the ownership documents of this equipment. Also, so for new PPEs, you can also look at occurrence. So if you do have the genuine purchase documents for this PPE item, for this equipment item, so that will be used as the evidence of this new purchase and also evidence of the rights obligation for this item. Thank you. Also, the other important assertion, accuracy, evaluation, and allocations, right? Look, in the page we have just mentioned, a lot of complex accounting issues regarding the PPE items, and a lot of them actually are about the valuation issues. So valuation, allocation, and accuracy is a most complex part for the PPE audit, right? So it will be very hard to audit. But if it is really very hard to audit, in terms of PPE audit, what can we do? We can actually use the professional valuer, right? So the professional valuer will be able to provide a valuation to the PPE items. We have different types of valuers in different industries for different types of PPE items in different industries. So using a professional valuer, independent valuer will be a very good way for the auditors, because the independent valuers usually tends to provide a much more reliable valuation compared to the management giving value. And also the independent valuers are usually considered experts in the area. So actually they take off some risks of this audit. So in the PPE audit, we say, well, we say, okay, so the PPE items, if once you purchase, you're going to use that for years. So that means maybe every year, the real changes in the PPE item might not be big. So what the auditors usually do is, if it is for the first year, we are looking at all the PPE items. We are going to do a very thorough test on the assertions of existing completeness and evaluation on all the items. But in the subsequent years, we can only focus on the changes, new purchase or disposal and disposal. So for the existing ones, we just need to look at the changes in the value. For example, look at the depreciation, look at the revaluation model, look at the fair value model, etc. So on this page, that is about valuation of PPEs. For the valuation of PPEs, so we in AASB 116, they introduce the cost model or the revaluation model. Either of them are allowed in the accounting standards. So that actually gives the discretion of the management, which one they are going to use. Are they going to adopt the historical cost for the PPE items, or are they going to use the revaluation model? The key thing for the auditor is to ensure the policy has been stably applied. If it has been changed, the auditor needs to ask the management documents to support the change. For example, the memo from the board meetings or from the audit committee meetings. So to ensure the changes in the valuation model has been approved by the company's normal procedures. Also, for the revaluation model, once they adopt, this revaluation model should be applied for the same line of equipments. So you shouldn't do that selectively. The other thing about valuation is the impairment model. Under AASB 136, so there are a few principal ways of finding evidence of impairments. One is observation of the item itself to identify the value changes, the devalued items. The other is for the discontinued activities, because those assets are not used in operations anymore. Usually that will also follow with the impairments. And management representation, management reply regarding the devaluation or the impairment will also be used as evidence here. Still about the valuation. So we know, so now in terms of the fair value accounting, we have used 3 different levels of fair values in accounting approach, right? So for different levels, the fair value model is different. In level 1, that is the most objective model. That is, the item in level 1 will have a well-accepted market correspondence for its value. So that means level 1 value is more widely accepted and also more objective based on market value. What is level 2? Level 2, that is, they use an external or a more accepted model to develop the value of this item. However, it's not very easy for you to find the direct market value for this item. So that is level 2. What is level 3? In level 3 fair value, the valuation model has been developed by the company, by the management themselves. So the value is internally generated. The valuation process is conducted by the management themselves internally. So level 3 value tends to be more subjective, right? Without a comparison, without a very objective comparison from the market. So in terms of different levels of valuation models, I think it creates a challenge to auditors. If all the fair value has been in level 1, the auditors should be quite safe. But if there are substantial amount has been put into level 2 and even in level 3, then auditors face challenge to determine the real fair value of these items. In this situation, if the company has a large amount in value in level 2, level 3, then how can the auditors do? First, I think level 2, level 3, if it's substantially used in the company, it creates big audit risk in the PPEs. Second, auditors still have a lot of good approach to deal with them. For example, they can use their internal valuers, the experts in valuation, to verify the fair value. Otherwise, they could recruit, they could also rely on the third-party independent valuers valuation to the items, right? So this is about the fair value models and how do the auditors deal with that. So overall, for the valuation issues to large PPE items, I think using the experts, using the independent valuers is often used by the auditors in dealing with complex PPE valuation issues. So now let's have a quick look of the substantive audit procedures to PPE audit. So for the first-time audit, we are often investigate all the opening PPEs, but in the recurring ones, we usually focus on the changes, addition, sales, and then the changes in the depreciation or repair or the maintenance, etc. Right? So in the transaction audit, what we do is first using the vouching to inspect the supporting documents for addition, retirement, and changes. We are also going to do the physical examination, that is to determine the existence of the item and also providing corresponding corroborating evidence for the valuation issues. Because, for example, if the accounting record mentioned the value of this equipment is very high, but by observing the physical existence, you found actually this equipment has been quite old. So probably you also need to consider the value of this item, right? In auditing PPEs, analytic procedures are often used. Why? Because we usually say, so the PPE items are not very quickly changed. So this slower change usually also means the trend shouldn't be moved very quickly. The other thing is PPE items are serve the purpose of operation. So usually we say the PPE value and also the consumption of the PPEs should be in line with the operation trend, right? For example, if this section, this operational segment has stopped operation, all the PPE in this operation should stop the economic use, right? For example, if the production level has reduced, also the consumption of the PPE items should also be slowed down, right? So for the PPE, analytical procedures will provide a lot of useful information. Recalculation is another important approach used in PPE audit. For example, depreciation. In the auditing of the depreciation details, calculation is often used by the auditors independently as additional evidence to what has been provided by the company's management. And also, in addition to the transactions, we also want to focus on a few, we also want to highlight a few things, probably also in relation to the accounting treatments as well. First, in accounting, how do we deal with the repair and maintenance expenses? Repair is going to be okay. Please answer the question. So in accounting, how do we deal with the expenses on repairs and maintenance? Are they going to be expensed or capitalized? So if they just restore the value to its original value, the repair and maintenance cost is going to be expensed, right? But if they add value to the PPE item, so this type of expenditure will be capitalized. So for auditors, they must be very careful about the overall purpose of the repair and maintenance. Are they eligible to be capitalized is a question for the auditor. They need to audit that, right? The other thing, how would you examine the ownership of the PPE items? As someone, I think Harry has mentioned before, so if it is a new purchased PPE item, look at the purchase documents, the contracts. If it is about building, maybe title deeds, right? Land building title deeds. Computer, the purchase documents, vehicles, the purchase documents, registration, maybe also insurance documents, etc. So for different types of PPE items, I think the title documents, the underlying documents will be similar, slightly different. That's the other thing we also want to emphasize. Also about depreciation process. As an auditor, what should you notice? Remember, in accounting for depreciations, there are a few accounting factors. They are useful life, they are depreciation approach, right? They are the residual value, they are the carrying value of the item, etc. So those accounting factors should also be considered by the auditors. First, are those factors has been determined reasonably? Who has determined those accounting policy for depreciation? Do the company has a change in the policy or not this year? If they have a change in the policy, what should they also do in accounting disclosure? So auditors need to do the reperformance of depreciation for the picked items. The other thing is the value, the final value, revaluation of PPEs. Basically, which is similar to the lower of cost and realizable value. For PPEs, the carrying amount should also be, so we also need to adopt the lower of carrying amount and net realizable value. As we mentioned before, the opinion from independent valuers are very important. So here we just put in a lot of detailed substantive test for PPE audit. Actually, you can have a look at that after the class. And the lease agreement part was about the audit before 2019 and after 2019, after we use the new AASB 16 leases. So the whole lease treatment has been simplified actually for us. But still, lease agreement is something something with a lot of opportunities for the management to do. Okay. And also, I just paste the examples of test in the PPE audit here for your reference, but actually you can also find them from the textbook. I want to spend a few minutes here about the PPE example. So we are auditing this company. This is an insurance broker company. The company has very simple PPE items like buildings, office equipment, cars, and the details are here. So in this audit, how would you verify the ownership of building, land, computer, and cars? Also, in terms of their depreciation rate, would you think they are reasonable? I think that would be very simple for most of you, right? Building. How would you determine the ownership? Title deed. Computer.
Receipt or invoice.
Receipt or invoice. Cars.
Registration.
Registration. Okay, that's good. So the second question. So they have been giving the depreciation rate and the depreciation approach for those three lines of PPE items. Do you think they are adequate? Actually, for for cars, Harris mentioned also insurance. Do you think insurance is a good document to verify the ownership? Yes. So for cars, insurance policy is also good, is also valid documents to certify the ownership to the cars, to motor vehicles. Okay, thank you. So let's go to the second question, depreciation rate. Building 2% per year on cost. Is this okay? Do you agree this? Do you think it is reasonable? Now we are the auditors for this company. We want to determine the adequate depreciation approach for building, which has been applied as 2% on cost. Do you agree with that? I think yes. So 2% on cost actually means the building has been given 50 years useful life and a yearly 40 to 50 years useful life for the building is acceptable, right? So that's a conventional rate and also in line with the ATO rates as well. Second, office equipment, especially for the computers, 10% on cost. Is this adequate?
It may not be high enough for computers in particular because that would give it a useful life of 10 years.
So 10 years useful life has been too long. So 10% has been too long. Do you also agree with the on-cost approach? So for computers, do you adopt the straight line one or the accumulated depreciation? On cost means the direct, the straight line depreciation.
I think it'd be diminishing value for
diminishing value or the accumulated depreciation.
Yeah.
Right. Okay. So this one, so the computer depreciation is not adequate. What about the car? 25% on cost.
I think cars would have a longer useful life than 4 years potentially, so maybe it could be too high.
How about the others? Do you agree with Anthony's opinion? So I think for cars, 4 or 5 years useful life in accounting is acceptable, right? But yearly we don't use the on-cost one, we use the diminishing one. So in terms of useful life for cars is okay, but in terms of the depreciation approach is not so adequate. So actually here we have discussed the verification to the rights obligation and also verification to the valuation assertions, in particular for the depreciation considerations, right? Okay. So I think this example will also be further covered in your tutorial question. So more detailed solution will be provided later on. So this is the part for PPE audit. And the next objective is about the computer-assisted auditing techniques for self-reading. And in the final page, those are the tutorial questions. So please further think about the lecture example in addition to the other 3 tutorial questions. And we are going to discuss that in the next tutorial, in the next week tutorial. So next week will be the teaching break. After that, we are going to focus on wrapping up this unit, and also we will try to do more tests, do more practice, because we have skipped 2 tutorials for the presentations. Okay, and if you have any questions regarding the case analysis, case-like questions, you can email me. And So thank you for today's lecture. And if you are in the next tutorial, see you in seconds. So see you. Bye.
Thank you.
Thank you.